So I'm David Field. Like some of the previous panelists, I've also changed hats recently. So some of you will know me as founder and managing director of the Field Effect. And we sold our business to Delta Capita. So I'm now wearing a Delta Capita hat as head of their securities financing practice. So I'm delighted to be here this afternoon and to moderate the panel on TRs. So we've heard previously from the institutions and how they're planning for and reacting for SFTR. So now we want to look from a TR perspective. So I'm delighted to welcome on the panel. I'll let you introduce yourselves. Joe, why don't you kick us off?
So I'm Jo Hyde, trade repository subject matter expert. Currently working at Regis TR. I'm the only person in the world who's worked at 4 EMEA trade repositories. Just launching the UK trade repository because of Brexit, so I'm also wearing 2 very fascinating hats at the minute. Highly involved in SFTR. I know quite a lot of the people in the room, so yeah, it's interesting to see what's similar and what's different and how we're going to work through this challenge together with the clients.
Hi, Stephen Holland, Univista, London Stock Exchange. I've worked at the Stock Exchange now for about 5 years, and I'm the product manager for SFTR. I worked on certain aspects of MiFIR, but I managed to just dodge the EMEA bullet because I joined a little bit too late. But yeah, so SFTR.
So Mark Steadman, I work at DTCC, and I'm the European head of product for the Global Trade Repository. So I've been with DTCC for about 5 years now, and led them through, or helped lead them through the EMEA delivery, and have been the European sort of lead since.
Okay, great. So we could potentially assume lots of knowledge in the room about TRs, and I'm sure there is a lot. But we thought perhaps we ought to just get a level playing field and kick off with talking about what is the role of the TR and responsibilities, and particularly talking about the I word, interoperability. Talk about some of the registration process. Our observation as Delta Capita is that a lot of the market, as we heard earlier, has gone through the RFP process for their vendors. Some decisions are announced, some decisions are made but not announced, some decisions are not made. But our sense is that the TR decisions are falling perhaps about a quarter behind. So some decisions are made but fewer. The RFP process is still underway. So I think it's very much more a live topic. So we'll talk about roles and responsibilities. We should talk about timelines, particularly with regard to testing. So that was a point that came up earlier on as one of the challenges, both testing with the TR and across industry. We should talk about the challenges facing TRs, how you see the world. And then we also want to allow some time for audience Q&A. So we'll try and allow some time for that as well. So we aim to finish in about 30 minutes, something in that order. Okay, Joe, why don't you kick us off and just to give the quick 101 on what the TR is for, not just how you face the market, but also how you face the NTAs and regulators.
Sure, okay. So when you've got a lot of practitioners in the market for these systemic risk types of regimes, unlike your market abuse, where you have a trading venue and it has one regulator that supervises it, and so only that regulator needs to get the data, then for these systemic risk regimes like SFTR, like EMIR, then it becomes very difficult for regulators all around Europe to have access to the data that they need if they are trying to go to individual firms and this kind of thing. So this is why we have this setup of trade repositories in Europe, so that we then are the recipients of data. We say this very often to ESMA. We are the recipients of data. They don't believe us. And we then, having received it from a lot of your good selves, pass it on to the regulators of the firms, of the venues, of the currencies, which are represented in your individual trades, so that they can look and see what systemic risk. So from our experience with EMIR, we might have a single trade which we report to 6 different regulators because the counterparties are in different jurisdictions and depending on the currency it's traded on, where the underlying instrument is traded. So we dish up an awful lot of data to regulators. Roughly for every terabyte of data we get in, we dish that up at least 10 times in size. So it's, I think at the beginning there was an assumption that TRs are just databases, but we're a lot more than that. And obviously then you get the inter-TR reconciliation, where if you're reporting to one of us and your counterparty is reporting to one of my peers here, then we need to make sure the regulation requires us to ensure that what's been reported on both sides by both firms is the same. So we then reconcile it to check that it is, and we tell you if it isn't. We also tell your regulator if it isn't, so that everybody is in the know about what's going wrong with your reporting. And that's basically where we are. So we kind of love us, hate us. I guess we're the Marmite in the sandwich between the regulators and the reporting firms.
Steve, why don't you pick up that thought about how the TRs work together behind the scenes, the interoperability, what the regulators are looking for, and what the experience of the market participants would be as a result of that inter-TR rec?
Yes, I mean, obviously we're mandated to match the data internally that we receive within our trade repositories. We're also mandated in the way in which we match the data together, and that data, as Joe said, we give back to the firms and the regulators, etc. But also we are, the centre point of that world. So we are, sort of the gatekeepers to both the firms and the regulators.
Can you talk us through the timing? So firms report by T+2, you deliver an ACK and ACK. Let's suppose you've acted, so you've managed to match it. If you can't pair it, so you therefore your assumption is it's potentially another TR. But what's the process and what's the timing?
Yeah, so we would do that on the evening of receiving those trades, and those reports go back the following day. So as a firm, you would know whether your trade is matched or not the following day after you've reported it, and that's across all the TRs. Yeah.
And is it similar to EMEA into TRX, or will it be different this time?
It's a good question. So a lot of that guidance will come in the following documents from ESMA. So we expect it to work, it will work in a similar way, but the timing and the complexity, because of the amount of data and the number of fields with SFTR, is going to be greatly increased. So whether it can be done in the same timeline is a good question, and whether they'll mandate it within the same timeline as well. So we'll have to wait and see what the guidance for the TRs is following, in the coming sort of...
I think on this case, it was up to the TRs and under EMEA to set that process in place. ESMA effectively has adopted that process. You can see that within the RTS too. If you read through the RTS, it lays out kind of step by step what a TR is supposed to do. So it's good to see they've adopted that process. And I think some of the comments on the previous panel about EMEA, if you look at the technical standards that were originally produced under EMEA, they were like this thin, wafer thin, as anyone who says, like Monty Python sketch there, but they were wafer thin. If you look at them now, they're pretty.
Surely, sir, can manage one more regulation.
Exactly, one more page, please, sir. So that it's pretty. It is much more instructive now. I think that's one of the biggest lessons learned from EMEA. Not only the time frame, which was also mentioned earlier, is in the explicit guidelines or rules they're providing, and I think going onto the guidelines now, that we're going to get a set of guidelines. We're not going to get a Q&A on the 10th of April this time. Well, I hope not anyway. But as we did under EMEA, we literally got a set of Q&A on the 11th of February for a 12th of February go-live date, which is about as much use as, I won't swear here, but you know where I'm going with that. So I think those guidelines, they're certainly adopting the MiFID strategy, the MiFID approach there with those guidelines. I think, as it was kind of outlined on the previous panel, and by the way, I think just probably, I think my colleagues here will all back me up here. I think if ESMA say, then it's going to be Chatham House rules here, right? So if ESMA say it's going to be just at the end of May, or just it'll be sometime after May the 23rd or something. Don't expect it on the 24th of May. So just so we manage everybody's expectations here. So yeah, that's the kind of process at the moment. It's pretty well defined.
So everyone obviously has to pick a TR or TRs, and maybe we'll come back to that. Mm-hmm. Once the decision is made, perhaps Mark, you could talk us through what's typically likely to be the onboarding and registration process and testing process.
Well, so for the two different things there, right? For registration process for a TR, so that's now open effectively. So we're having conversations with ESMA right now. In fact, I'll be in Paris next week talking to them about the registration. We go through now, a process where we're outlaying how we're going to, how the solution is going to be. I think for all the TRs effectively have gone through a recent registration process because of Brexit in some way or form, which I think is going to help us all to be honest. We've actually gone through it somewhat twice because we registered for FinFrag recently, and whilst it wasn't a registration process with EMEA or with ESMA rather, we had to prove operational separation before they would basically give their blessing on it to because we operate it under with ESMA as our supervisory body there. So that is, I think, for us all has put us in a reasonable place for that registration process. But they won't sign off on it until you've built it also, which is interesting when you think about the comments around ISO 222, the guidelines, what stage. We don't know what stage they're going to actually finally sign and stamp it and say you're registered, given still the relative uncertainty that guidelines might bring and what they're going to see. So that's some of the conversations that we're having with them, and I'm sure both Univis and Regis having with them as well.
So it sounds like formal registration might be really quite late in the day.
Yeah, well, so they originally gave us.
They
originally set out. Interestingly enough, and at least they've changed their stance on this. They originally said, "Don't come and bother applying to us until you've built it," and then we expect us to take about 6 months to register you. So you're okay, and you're not going to get the guidelines till this time, and the ISO scheme is going to come out this time. So potentially you may not have any TRs on your books come 11th. So they've softened that a little bit.
That could be more of a showstopper than a lack of a UTI then.
Yeah, I think so. Yeah. So they've taken a bit more of a sensible approach with regards to at least allowing us to apply before we built it, and then just going through that process. So I think that's the registration process. So I think for the word out in the industry is don't start panicking if you haven't got a TR registered until latter part of this year, because it's probably not likely to happen because of the process. And on the onboarding process, so for DTCC, I can only speak for DTC, but it's just a simple extension of if you're already a client of ours, then it's a simple extension to what your client documentation you already have with us. It's a simple DocuSign click for us, and also connectivity. It's a shared connectivity. So that's for existing clients, and for new clients, it's a fairly painless process as well.
Okay. We talked on our preparation discussion around whether people will choose a single TR or multiple TRs. I mean, Joe, do you want to comment on, are there any advantages at all of multiple TRs?
Yeah, I think it really, and I've had this conversation with Neil, who's my colleague from Clearstream, who was on the previous panel, because obviously, as he said, for some firms, it's going to be much easier if they delegate certain portions of their reporting to their counterparty or their lender or whoever it is, because they just don't themselves have all the data points that they need to be able to submit that report. But in other parts, it may be that you want to do that data submission yourselves. It becomes tricky when you have multiple trade repositories, because if you're going direct to the TR, and I'm not trying to plug any of the services of anybody who's building we're in at the moment, but it is tricky if you go direct to the TR and you've got some of your data universe sitting in one trade repository and some with another, and we certainly do have that circumstance in EMEA. What then happens is not only have you given yourself a BAU reporting obligation, you've also given yourself a BAU monitoring obligation across multiple platforms, multiple feedback files, this kind of thing. If you are using a vendor, then you have got the option, to consolidate that view in the vendor platform, irrespective of where that's going in the back end, to which trade repository. So, yeah, at the moment, it's the bigger firms who are choosing their trade repository and making a single definite choice that they want all their data to go to this place because they're in a position to do their own reporting themselves, and they have the staff, the technology, the projects and programs in place to do that for themselves. I think once we start to get a little bit more engagement from the medium and the smaller size, then they will start to think, hey, I can't do this myself, and how, who can I farm this out to? And they might eventually find themselves in a slightly more difficult BAU situation if they've got data residing in multiple locations or being reported through multiple vendors.
So perhaps as we look ahead to the next 12 months, Steve, maybe could you just talk us through where you think customers are generally on their choice of TR, and in particular where perhaps obviously speaking of Univista, where you expect to be ready for testing and when you're seeing customers being ready for testing. So how do you see that all working out?
Yeah, that's an interesting one. So interestingly, we've heard different things from clients than what the webinar earlier, that we held with Market last week shows, that a lot of people think that they either the 18% that weren't ready, which is quite a worrying figure, or that sort of 50% are thinking we will probably make it, but we're not 100% sure. So that's slightly worrying. Conversations we've had with clients that they are thinking about being ready for testing sort of Q3, Q4 this year, which obviously with an April go live is probably an advisable thing. What we saw with Mafia and EMEA is the more time you give yourself for testing, the more chance you have of hitting that date with reasonable, with a reasonable sort of processes in place. So that's where we're heading for. We'll have our UAT available sort of July, August time to fit with that timescale. Again, it will depend on how late sort of the backup texts come from ESMA to how complete that will be and how much we have to build twice effectively and change. So it will be slightly an in-flux system at that point, but at least it will be something that people can test against, get responses from, set their processes up, that kind of thing. So that's the sort of timescale that we think people should be looking at for an April go-live.
Yep. Perhaps I can invite Mark and Joe also to comment. So are you seeing like a two-phase, like a first phase for what we know now that people can test against, and then a revision as more validation?
I think that one of the things, and whenever I speak to clients, one thing this regulation has given us, and despite some of the, and I do wonder if that by the way, those statistics is clouded somewhat because there might be some asset managers in there who do not have a reporting obligation until back in the next year. So hence they're not, that's why they're not as prepared. So I would be interested to see the breakdown of dealers or people, firms who have a reporting obligation next April compared to those who don't. But I think it has given us time, and I think this is why the regulators may not be as relaxed about non-compliance necessarily as they have been certainly under EMEA on those early days, because the regulations haven't really changed an awful lot since March 2017 over RCS when they were issued by ESMA for the Commission approval. They haven't really changed too much. So I think that has certainly afforded us a lot of time to prepare. And I think one of the first things this is going to give us is also, we expect firms to have been through our simulator before they even get to our UAT, which will open up in Q3, Q4. So, so that, because I think under EMEA, in the various phases of EMEA, the first thing that clients struggled with was to get the data into Repository. Because, and to be brutally honest, we at the time we didn't have the tools available that we have now for our clients, and secondly because of the time frame that has already been pointed out was very condensed on the previous panel. So I think that's the first thing, is about getting the data into the TR. And my expectation is from our clients is the entry criteria is you've already gone through our simulator and you will be able to get your data in. So I think that in itself gives the industry a whole, that 6 month period really to what we're classing as full industry UAT, because we would. And our view is we're already open for UAT because you can come in, you can test on our simulators today, so you can already test, right? But that full industry UAT, kind of Q3, Q4, is when firms need to start looking at the quality of their testing. We look about best practices that ISO and ICMA are driving through. First of all, take a look at their inter-TR reconciliation, pairing and matching. Are they getting pairing and matching statistics that they're expecting? That is going to be driven somewhat, I think, through best practice reporting as much as it is the kind of quality of your data underlying. So those are, from a testing perspective, and certainly Tom mentioned it on the first panel. the focus that's been on within the whole industry on testing this time round is light years ahead of where it was for EMEA. And I think that is going to be a big benefit, and I think it needs to be brutally honest, because if you look under EMEA, it's the derivatives world in some respects had already experience within reporting. The big dealers had ODRF reporting back to the way before kind of CFTC came in place. Then you had CFTC, which was basically just send us all your data, albeit tight time frames around it. And then you came to EMEA. The first wave of EMEA was quite loose in the validations. There wasn't really the validations, and they gradually tightened it up. So the derivatives industry, which was probably much better prepared for reporting in the first place, because it didn't have the complexities around, particularly around sec lending, that you see in the industry, still struggled a lot to get to where they are. This industry, the SFT industry, is repos and sec lending. It is really a big bang, although it's a phased delivery, which brings its own challenges. It's a big bang in regards to what is it going to be expected of you on day one.
Well, let's maybe, Joe, we can pick up on that. So what's it going to be like on day one, and what challenges arise from phased delivery?
Okay, so I think it's going to be carnage on day one. I think that's probably fair to say. And on day two, it's probably going to be worse, because that's when we'll start doing the first reconciliations. Joking aside, I think...
Oh, that was a joke.
Deadly serious. I've got my T-shirt on under here that says carnage on it. Winter is coming, that kind of thing. So I think a lot of people that I speak to, you guys are lovely lot of guys. You haven't been through the wars that we've been through, frankly. And it will be, I think a lot of people have a lot of expectations around the quality that they can achieve early on. And I really want to say to you, you are going to be nowhere on day one. You're probably going to be nowhere on week one, month one, maybe even year one, because it's a process. And as was said previously on the panel, that date, April, if you're in that first wave, that's not the end, right? That's the beginning of when it really starts to happen. So what we see from regulators, if I think back to kind of the EMEA experience, was, there was some panic, there was some late stuff. Some people still thought ETD reporting was not going to happen, and all this kind of thing. But ultimately, what regulators are looking for, comes in waves. And I think it depends on how well it's going as to how quickly they move through the phases. So, the very first phase will be, they know, if you're a UK firm, the FCA knows who you are. They know what business you do, right? You never, if you're a lawyer, you never ask a question you don't already know the answer to. So they know what they're expecting to see, and they will be getting data from us from day one. We will do testing with them, connectivity, all this kind of stuff. They know what they expect to see. If they don't see it, they will call you. Yeah. This is our experience from EMEA. Firms which weren't reporting got a call within the first couple of weeks to say, you have a reporting obligation under EMEA and you're not fulfilling it. What's your plan? Have you onboarded with a TR? Have you done any kind of selection process? What's the status of your onboarding? Have you done testing? If you aren't perfect, what's the plan to get perfect? Yeah? It's not enough to think, I'm sending data, I'm doing these things. You have to be constantly, it's like being married to a guy, and I'm separated, right? It's like being married to a guy who is always going to be cheating on you, right? Doing transaction reporting, you cannot assume it is working out well just because you're not aware of any issues, right? It's probably going, and unfortunately my colleague here has her hen do tomorrow, so I apologise.
Stay cheerful, stay cheerful.
You have to assume the worst about your transaction reporting, because if you don't, it's going to probably cost you £50 million in FCA fees and fines. Yeah, so it's worth having a bit of a negative feel about how is my reporting going. I can't just assume it's all right, yeah? Let's be a bit negative about it. Show me that it's working. And if you're a firm that's covered by the FCA, they will expect you to look every 3 months, whatever it is, and you might have had this experience with MiFID, take a section of your data, confirm that it's right, it mustn't just pass validations. It actually has to be the correct data, because anybody can put USD on a trade and it should say GBP. Just because it passes the validations doesn't mean it's correct, right? So I would say assume the worst, yeah, and go through. It's not going to be correct on day one, but you better have a plan, and you better be able to tell your regulator what the plan is, what the problems are, and what your timescale is for fixing them. Because what they really care about is, you know, eventually, are you going to be getting it mostly right most of the time? Or are you just chucking pasta against the wall and seeing what sticks? And that's the
cheery note, I'm going to say something about testing, because clearly testing is all.
Yep.
And I wanted to clarify a couple of comments made on the previous panel around collaboration, which is clearly broken out across the industry, which is great. A bit of a shameless plug. So Delta Capital is working with sort of 8 to 10 firms, many of whom are in this room, on a consortium to create an industry standard test pack. So a set of, modelling all of the scenarios that have to be tested, so edge cases as well as prime vanilla, providing all of the test data to support the testing of all of those scenarios, and the expected results in both CSV and ISO output. So every firm is going to have to create that for their own account, and it just seemed to us a while ago that if that were done on a kind of collaborative basis, on a shared cost basis, then that's probably A, going to be lower cost, and B, going to get better coverage and better quality of testing. And the consortium is actually quite well represented from both agent lender side and also PV borrower side. So, and that's open to all, so if anybody's interested, then obviously come and have a chat afterwards. But obviously testing is key, and I think your point is it doesn't finish in April. It's going to
it doesn't. You know, and just to kind of, these guys have said where they are with. So our pre-UAT environment is available currently. We wanted to give firms and vendors a year at least to do the testing, because as you say, there are a lot of use cases across the different areas that need to be reported. So again, you know, it's no obligation, it's no fee, you know, all this kind of good stuff. But we would encourage you to get on with it, frankly. And I don't think anybody's mentioned ISO, but I had a question from a prospect last week, which was, can you just send me the template for the ISO so that I know how to fill it in? If you're asking that kind of question, you really don't understand how complicated it's going to be to do the ISO XML, yeah. And if you are asking that kind of question, or you don't understand what's wrong with that question, I suggest that you speak with any of the people around here who can help you understand how much of a heavy lift that is going to be, and the amount of data you're going to need to generate, and the kind of complexity that there is around the ISO and the XML formats.
Great. Okay, I think we've got about 5 minutes left. Can I invite questions from the floor? You did promise me you could ask a question. I'm going to deflect to the panel, of course.
Dan, just bring your own mic next time.
There's one coming that side.
Dowd's one coming down this side.
There's one.
Afternoon. So with portability and interoperability being the main themes of ESMA's work with TRs, what's the differentiation between the three of you, and why should I pick one of you?
Did we agree we weren't going to cover that?
Didn't realise it was a beauty panel. We said we won't do beauty panels, but...
So, yes. So I guess it's all about value-add service, which will be similar in different ways, but obviously the core service, yeah. Steve, do you want to cover that?
Yeah, I mean, I guess in terms of the TR itself, the regulation controls exactly what it is, and the value add is going to be the services, you know, around that, and the way in which, you know, data can be got into the TR partners, extra products. So we have an accelerator platform, which is sort of a data layer, early testing, pre-UAT. We're partnering obviously with a lot of vendors to get the data to the TR in the easiest way. There's going to be data enrichment. So all those things I think people need to review from the different TRs and work out, you know, what fits their need, better than others. I think some people are going to struggle with the complexity and breadth of the data, so they might need data enrichment. Some people are going to, you know, as Joe said, struggle with the XML formation, how technical it is, the workflows, etc. So they're going to need help there. So it really is dependent on the fit for your firm, really, I think.
Joe, Mark, do you want to add to that?
Oh, yeah. So, I mean, for us, I think there's a slightly different angle, because obviously, you know, Neil was here. We have the whole Clearstream aspect, and Eurex Repo and all of those things in our group, because we're part of Deutsche Börse Group, and Iberclear as well. So they have their own reporting obligations, and they will be offering delegated reporting, for counterparties who are interested in it. So, we have, and Neil and I spend a lot of time together at various things.
Is that related to the previous story?
It's funny, actually, because my ex-husband is also called Neil, but it isn't that Neil.
How confusing.
No, I'm not going to say that.
Later.
So, but it's great, that from his perspective, he has our expertise to draw on, and from our perspective, that we have that expertise, and it certainly will be the case as we get, towards the date that we will start permanently seconding people on from Eurex Repo and from the Clearstream side to populate and all of those things, so that we know exactly what it is that we're talking about, and we're able to turn around those questions, whether you're reporting direct or whether you're coming through a vendor, so that we can add that service and understand what it is that you're talking to us about. Because I think that was a concern previously, where you have got, trade repositories offering service which, is next to what their core is. So, either they knew a lot about OTC, but they didn't know much about ETD, or they knew a lot about ETD and didn't know much about OTC. It did make a difference at the time. So, for us, that's a value add that we offer.
I think go back to the first question that David asked, what's the role of a TR, right? So I think first and foremost is to make sure you're compliant, right? You want to be compliant. That's the most important thing for you as a firm. So for that is service. You need service. You need the tooling to help you get you to that. So first of all, the service, help you to get to that April the 11th date in as best shape as you could possibly can. So provide all the tools around that. Secondly, post April the 11th is just as important to make sure, to provide you again with the tools and the service, the post go live service, to make sure you're compliant, and we're doing everything we can to help you. I mentioned about tooling from a UAT perspective. Advocacy is a really important thing as well. So, does your TR, what relationships does your TR have with the regulators? So we at DC have a very big regulatory relations team where we are talking constantly to the regulators, not just ESMA, but the NCAs, and then globally as well. So I don't know how many firms here have a global obligation, but we have great relationships with the CFTC, ASIC, MAS. So when, and it will be a case of when this goes global, that's something you should think about when you're considering your TR. And I think the final thing is community. Can your TR bring together the community to have added value working groups, and also provide back useful benchmarking within that post go live tooling. So it's not only about you're going to get potentially to day 2, day 3, and you're going to see your NAC rate, right, your reject rate maybe at 10-15%. Is that good or bad? You don't know, right? So the regulator is going to be seeing the same data as we've got. So can your TR provide you with useful benchmarking because it has a large community of users?
Great question. Thanks, Dowd. I think we've got time for one more question.
Hi. Question to DTCC, actually. We do a lot of, we clear a lot of trades on FIC. So is there going to be a pipe between FIC and DTCC?
So I didn't get that.
Sorry, Sam, could you hold the mic a bit closer?
Sorry. We do a lot of trades on, clear a lot of trades on FIC. And you guys are same company, presumably. Is there going to be a pipe between FIC and DTCC?
Yeah, that's a good question. We are looking at that because we're also going to be doing, so we're also going to be clearing repos as well in the US very, very shortly. So we are looking at that, the same way that there's a vertical integration there for Regis. We are currently investigating that so we can get that flow through from our, which is predominantly US. It is predominantly US FIC and clearing we'll be doing for repos. But there's still some European firms that are in scope that are doing trades and clearing out in the US. So we are actively looking at that. Yeah.
Okay, good. Thank you very much. Well, I think that means we've now run out of time on for this panel. So thanks very much for your questions. That's great. And please join me in thanking the panel. Well done.